All right, so everybody, this is Brian. I met Brian a little bit ago. Just noticed he had a very interesting style of trading. Something we talk about a lot on here is simplicity and the simple way of looking for relative strength, breakouts. What's funny is Brian actually has his screen up, and I wasn't looking at it. It basically just said that how to create a leadership board, mindset, strategy and mindset. So Brian basically puts all of these things together and is able to put trading together. And what we talk about a lot on here is the fact that you have to not only do you have to understand technicals, but you have to be able to execute. You have to be able to get out. You have to not hate yourself when you get a trade wrong, and when you get a bunch of trades in a row wrong, which will happen to you at some point, you have to still have the mindset of being able to get right back into that next trade and not let it destroy you. And then you have to stick to your plan. We always talk about, a person with a plan can beat anybody. And most of the time, people don't have a plan. So Brian puts that all together. And so we wanted to get him on just to get a little chat with him and get some ideas of how he does what he does, how he catches big trends, because Brian uses a very long term strategy, which is what I like to do as well. And kind of in that long term strategy, you see him picking up all of these trends all the time. And we want to talk about that today. So, how are you, Brian?
I'm doing great. Glad to be here, Jason.
Good, great to have you. So first thing we'll talk about is let's go straight through your list. Actually, this actually looks great. So
Yeah.
talking about leaders. So what do you look for when finding leaders? What exactly does that mean, and how do you
Mhm.
find them?
Yeah. So when I kind of got started with trading, got interested in markets, right? Um, I was actually doing the opposite of looking at leaders. I was looking at, stuff that had fallen a lot, right? And thinking, oh, I'm getting a bargain. So, back around 10 years ago, we had the peak in the gold bull market, right? So basically from the early 2000s to 2011, we had this amazing gold bull market. Basically went from low $200 per ounce of gold to 1900. And, living in Vancouver, working for mining companies, I guess you can kind of say I had a bias towards the mining sector. Plus we were in this amazing bull market. So when things kind of turned, I didn't really understand the concept of like trend change, right? And that we've entered a new bear market. And so, unfortunately for the next couple years after the peak, I was the guy that was constantly trying to, fish the bottom, right? Fighting the
Yeah.
trend, not observing that, gold had actually become, you know, a laggard, and then there was new leadership in the market, right? So I just completely ignored that, and I kept trying to force a trade, kept trying to, yeah, just not respond to the what the market was telling me to do, right? I was too busy trying to tell the market what it should do, and I wasn't paying attention to what it was telling me to do, right? So
Yeah.
that was the key, mistake that I made for a long time. And we're all kind of you know I guess sort of conditioned to think that something falls in price, it's cheap, right? And you
Yes.
should go out and scoop it up, right? But that's unfortunately not always how things work. So what kind of happened in the successive years is not only was it my experience that taught me that fighting trends is a terrible idea, but just kind of picking up and finding research out there that kind of showed, hey, don't fight the tape, right?
Yes.
Momentum is one of the premier anomalies in the market, right? Strength begets strength, weakness begets weakness. And some of the papers like early on, Meb Faber, um, he published a couple of papers, one back in 2007, a quantitative approach to tactical asset allocation, and then a couple of years later, relative strength strategies, right? So both
So
of the,
that's funny is that that's something that you and I have never talked about, but that's something that really kind of changed my outlook on trading too, which was
yeah,
finding Med Faber's white papers and being like, wow, this, because I'm very quantitative.
Yeah.
That's
Yeah.
my approach completely, and finding some guy that mixes quant and value was the weirdest thing ever, and so it made me really read about it. Now I've certainly
Yeah.
stepped away from the value approach, but certainly quantitative approach and relative strength strategies are phenomenal. But yeah, sorry to cut you off, but I had to
Yeah.
interject there
Yeah.
for a sec. But yeah, go ahead.
Yeah. It's actually amazing how many like traders have kind of like been influenced by Meb's work. He was kind of one of the early guys, that kind of put this research out there, right? Kind of when blogging FinTwit was taking off, like, he was, this was one of the early papers, right? 2007.
Yes.
And, um, yeah, like, so both these two papers, like when you read it, the first thing that strikes you is, okay, yeah, don't fight the trend, right?
Mm-hmm.
And just aligning yourself with market forces not only gives you alpha but drawdown reduction, right?
Yes.
And so the data that's in these papers, like it stretches back to like the 1920s. So you have like a century of backtest history, and you get to see, okay, is this something that just kind of came and went? No, it's something that has persisted, and it's persisted even on a decade by decade basis, right?
Yes.
In all types of market conditions, whether it's rising interest rates, falling interest rates, value or growth, right? Foreign or US markets taking leadership. So, it's stood the test of time, um, yeah, and then there was actually quite a few, different things that this paper kind of teaches you, right? And it's actually not just Meb's work, but at the same time, there was a guy, Gary Antonacki, who was publishing very similar kind of work. And Gary wrote a book later in 2014 that kind of put everything kind of in one place, where Gary talks about the history of momentum, all the traders, successful traders that have applied it.
Yes.
And he talks about the alternatives to momentum investing. He talks about some of the pitfalls in structuring a trend trading system. So there's quite a lot of knowledge just in that one book. But going back, just Meb's work, Gary's work, the thing that kind of strikes you right away is, not just how powerful momentum is, but just how a simple strategy, right? We're talking about monthly rebalance, like
Mm-hmm.
checking, past 1 year performance just once a month, right? On,
Mm-hmm.
let's say 3 to 5 ETFs, broad-based ETFs in different asset classes. You can be in your universe, you can be looking at US, non-US. You can look at commodity fund, you can look at a bond fund, and then basically just look at what's done well in the past year. And you want to follow that leadership, not fight it, right?
Yes.
And basically every month you check, you allocate to the strongest asset class if you're not holding it already. Most months you're just already, it's already in your portfolio. And so what ends up happening is you only make something like 2 to 3 trades a year, right?
Mm-hmm.
And so the thing that I kind of had in my mind before, like, I mean, I had gotten introduced to technical analysis even before these papers. Like, there's a lot of blogs out there, people posting charts, and you look at the charts immediately. First of all, you realize, wow, market has, price has memory, right? And
Yeah.
you can see the order in the price action, and then right away, I just fell in love with that, and I thought, okay, TA is the way to go. Um, you know, but what I was doing was, I was abusing technical analysis. I was making it complex. I was
Mm-hmm.
drawing all sorts of, like, I had all these fancy indicators on my charts. I was looking at intraday prices. I was fighting trends, you name it. Like, I was, applying it, as badly as you can.
Yeah.
And so then when I came across these papers, like everything kind of just clicked, right? It's like, okay, look, you don't have to be staring at your screen 4 hours a day. You don't have to be complex. A simple solution, a monthly rebalance, a weekly rebalance or a monthly rebalance, is powerful, right?
Yes.
Um, and yeah, don't fight the trend. Be simple. Broad-based ETFs are okay. You don't have to do much trading. You don't have to sit in front of your screen hours a day. So all these different things just uh, kind of crystallize for me in these few research papers, right? You don't have to like add extra layers of, okay, I'm looking at seasonality, I'm looking at, sentiment, I'm looking at all these other things, like, price alone is powerful, right? Just aligning yourself with trends is powerful. So, again, over the years, I kind of just, gravitated to something that's simple, something that, I don't have to have paralysis by analysis on. I don't have to second guess myself. It's pretty much creating a binary um, outcome, right? Basically having a thumbs up or a thumbs down, something that you can basically show, somebody that's, 10 years old and they can get it, right? That, this is where we're long, this is where we're out of the market, right?
Yep.
Um, and, again, the key concept, again, another key thing that is in these papers is you want to combine momentum and trend, right? So those are two different things. Momentum is, what are the strongest areas of the market, right? What are the leaders? And then we want to look at, the trend. Is the trend up or down? Like, well, if it's strong, yeah, the trend is going to be likely up, right? If it's a strong asset class or a
Yes.
sector or a stock. But what I mean by trend is waiting for like a nice base and then buying the breakout. Because why do we do that? Because we want to manage risk, right? We want to basically be uh, long as we're above the trend, and we want to be out if we're below the trend, right?
Yes.
So essentially, what you're doing is you're following leadership to get that alpha, right? To get the the names that are going to produce the returns, and then we want to use trend so that we manage our risk and our drawdowns, right? And if you think about, okay, so how do we assess trends? Because that you can do it a million different ways. How do we assess momentum? That you can do a million ways as well, right? And so what I've done in my blog is there's an about me page where I kind of just list, first, what do I look to find leaders? And then second, how do I assess trend, right? So in the research papers that Meb and Gary have written, they talk about momentum as, past 12-month performance, right? And they talk about trend as, so Meb defines it as, like a 10-month moving average, right? And then Gary defines it as, absolute momentum. So if the past 12 months, the return has been greater than zero, right? Then it's trending up. If the return has been negative over the past 12 months, then the trend is down, right? So now how I do leadership is, I sort of took those concepts in these papers and I've kind of, instead of being a purely quantitative based system, I've basically incorporated charts, right, into my process. And the reason I'm using charts is I find that you get basically like a more well-defined entry and exit. So when you're doing breakout trading, and this is the key distinction, right? So when I'm buying a breakout, I know where I'm going to be wrong, right? If that breakout doesn't hold, well, guess what? I'm out, right?
Yes.
With a quantitative system like a moving average or momentum, like past 12-month performance, you can be getting in today, but those moving averages are sort of like a soft stop, right? And like 2 months from, weeks from now, months from now, that moving average can be either higher or lower, right? So you can be potentially stopped out at a much lower level or a higher level, right? Whereas with breakout trading, it's a hard stop. Like there's a a certain price point at which I'm out, right? So I really like that concept of really controlling the risk a little bit better. And the other thing is, like, you can pick up on moves that are a little bit more quick. So this past 18 months has been a really fast market, right? There's been all sorts of sectors that have had really phenomenal moves, moves that happen in a very short amount of time. A really good example is earlier this year, the marijuana ETF, MJ, came out of this base. I think it was in January, came out of a base, and then within weeks, it did a double, right?
Mhm.
And so kind of, seeing the base breakout, buying the breakout, and then, basically exiting at, resistance from like 2017, 2018, right? That kind of gave like this, what I call a sniper trade where, you have a well-defined entry, a well-defined exit, and, it's a very short-lived move. And something like moving averages are very tough to time the entry properly when a move is that sudden, and then it reverses and enters a bear market quite suddenly, right?
Yeah.
So you have a little bit more precision. That's the word I like to use with breakout trading. The way I do breakout trading, um, I'm actually jumping a step. Maybe I should talk about leadership first, right? Because that's the first step. So leadership, again, there's very like a lot of different ways you can assess leadership.
Yeah, we'll
And
go through leadership, and then we'll stop and we'll go into breakouts after that.
yeah,
Sounds good.
yeah, that sounds great. Okay, so yeah, again, leadership, we're buying strong stuff, right? So we're aligning ourselves with the market forces. We want to buy strength. And how do you assess strength? So there's a lot of different ways out there. And we're actually lucky that we have all these different online tools at our disposal. Most of these are free or very low cost per month.
Mhm.
One really good place is stockcharts.com. They have what's called these scooter rankings. So basically stock charts technical ranking. And you can, basically filter to US ETFs or individual stocks.
Mhm.
And what it does is basically gives you, a list of, strongest to weakest ETFs out there. And they have various different criteria for how they rank them. I think they use short, medium, and long-term time frame indicators, and we combine them into an overall ranking system, right?
Yeah. One thing
Uh,
to add too is that
yeah,
on the reports you can also switch it to industries, which is also very helpful for me too. So
yeah,
US ETFs, industries, and the industries are nice because it touches on things that might not have ETFs. Like we have some coal stocks at the moment, which is very odd. But coal is actually the leader in industry wise. So this is a
yeah.
great tool that he's bringing up right now.
Okay, yeah. Um, is that like a cold ETF or?
No, so there's so if you go to stock charts, you'll see that there's right in this exact thing that you're using, you can click on where it says US ETFs, and it'll also
Okay,
say US industries, and you click on the industries, and they just stock charts actually, they've been doing this actually before they even had the ETF rankings, that they'd
oh,
have
got it.
all these industry rankings. It's very cool, very
Oh,
interesting.
okay, so they're probably just using like these Dow indices or something like that.
Yes, the old Dow indices, yes.
Got it, got it. Okay. Um, so yeah, this is a very good resource. Check it out. The next one is so etfdb.com. This is another really good one where you can create a screen. So you can basically choose if you want to look at, what's market cap size, what AUM, what kind of volume, right? You want to basically try to look for liquid ETFs. You can even specify issuer. So there's all these, you can specify what fees, right? So anything like let's say under 1% fee. Um, and it basically gives you a list of all these different ETFs out there that meet that criteria. And then what you can do is you can basically filter and sort by, let's say, past 1 year performance, right?
Yeah.
So this is another really quick way to just see like this, I guess this screenshot here was done last year. And at that time, solar was, the strongest sector at that time. So yeah, this is another really good one that people can use. You can even export this to Excel and do all sorts of, analysis, filtering, etc. And number three, FinViz. So this is a really powerful tool as well. There's a lot of different, criteria you can specify. But again, you know, I just want to identify leadership, right? So, I just want to see, like basically I can sort to see what's, the performance over the, let's say the past 6 months or 12 months, or I can even look at what is the percent from the 52-week highs and lows, right?
Mhm.
And this kind of leads to a tool that I kind of just developed in the last, 18 months or so. And it's just a visual representation. So I have a universe of something like 60 plus ETFs, and Excel lets you fetch all their prices, intraday prices. You can get 52-week highs and lows, market cap, and all these other different attributes, right? And if you plot 52-week, basically highs versus lows, you can basically see what the leadership is in a really quick visual format, right? So anything on the upper left is the leadership, right? That's the stuff that's very close to its 52-week highs, and it's very high from above its lows, right? Conversely, the stuff on the lower left is the stuff that's super weak, right? It's in a huge drawdown, and it's close to its
One sec,
52.
Brian. So you
Yeah.
meant upper right when you're talking about leaders,
Oh,
correct?
sorry. Yeah, yeah.
Okay. Just wanted to make sure.
Yeah, upper right. Sorry about that. Yeah, upper right is the leaders, and then lower left is the laggards, right? So,
Mhm.
and again, this is a bit outdated. Here's the current leadership right now, and you can kind of see that the stuff that's really moving the needle right now is rare earths and uranium, right? Uranium, actually, I just wrote a blog post today on this, how it's catapulted itself in the last 2 weeks into the strongest leadership region. So that's definitely been a huge winner in my portfolio recently. On the other end of the spectrum, you can see what's the stuff that's been super weak, right? And we can see China tech, right? Marijuana, and the precious metals, right? um, you know One thing that I should just I want to point out is, like, look how it's been quite a while that China has been weak, right? China tech, this has actually been something that has been sitting here in this, what I call the penalty box or the no-go zone, right? It's been sitting here for a long time. And how often do you see on FinTwit, people being like, okay, yeah, this is a bargain, I'm going to go in for a trade here, right? And maybe their short-term time frame, I'm not sure, but it's, for me personally, I'm not looking for that quick 1 day or 2 day snapback, right?
And even
I'm
if you
looking.
are, it still doesn't work that well either.
Yeah, it's super dicey. Like, you're basically you know you know walking into a headwind, right? Like, you're fighting the current. It's a super choppy market. And yeah, again, not for me. This is something that has been sitting here. Gold miners, China tech, even marijuana has been sitting in the weakness region for months on end, right? And it's a great way just to kind of sidestep from a disaster, and just let it sort of give it time, let it base, let it form some sort of base, and then break out. And that's when we're going to see it emerge out of the red into the white. And then I'll look at the chart, I'll say, okay, yeah, this is actually coming out of the base. I have a well-defined risk reward here. My stop is well known. I'm going to go in, with a certain position size that, is not going to be the end of the world if, this thing reverses back lower again into its downtrend, right?
Yes.
So that's the mindset is, we're not trying to, get the exact bottom. We're not trying to get the exact top, right? And you can really save yourself a lot of damage, a lot of trouble, a lot of tossing and turning at night if you just wait for that, perfect setup, right? And the biggest mistake that I've been making for a long time is, just forcing trades, bottom fishing, trying to catch that exact low. And, over time, I realized, you know what, there's only a few, amazing high quality trades a year. And if I just stuck to those ones, I would have had phenomenal years, right? Kind of goes back to the papers that I was talking about, how only a few trades a year can deliver really good results. So just be patient, wait for the setup, and then follow it, right, with proper risk management. Yeah, so I always say price and patience is all you need, right? And if you think about it, price, you listen to price action and you be patient, you wait for the setup on the way in and on the way out, right?
Yes.
So yeah, so that's the current leadership. So I think that about
Well,
covers it for, yeah.
yeah, let's stop for a second. We're gonna move on to breakouts, but I want to talk about this a little bit because it was on the questions for you too, and talk about rare earths and go back to the new yes, that one. So talking about rare earths and uranium. So it's kind of interesting, and I'm talking to one of my very close friends. He actually we work together. He's a great analyst. Probably knows more about fundamentals and trading than probably anybody in the world. But
Mm,
he's at the point where he's starting to understand that the price action pays. And we're getting into he just actually messaged me before we hopped on, which is fortuitous, but we're talking about uranium, and he mentions, hey, like the analyst in me is telling me that uranium's bad, and the price action's telling me that uranium's good,
yeah, yeah,
and that to me is really like one, I'm seeing the major growth in him from just that statement, and number
yeah,
two is
yeah,
it's completely right where you have, because for me, I'm seeing rare earths
yeah,
and all these things on my leadership thing. They're never anything I would ever want to be out of or
yes,
short or
yes,
anything like that when they're in the
yes,
leadership category. When they're down there, like for example, K-Web and all these things, sure,
right,
maybe they're already beat to crap, but it's not something I want to be long. And this
right,
is a very simple strategy that Brian's putting together here for you guys to look at, which is just telling you stay away from this. I mean, and most of the time, and I think Elder actually said this very well, which is most of the time trading is what not to do. And
yeah,
so sometimes you're just sitting there looking at what not to do when you're seeing all these things in the red and you're seeing all these things in the green. That's things to take buy signals in.
yeah.
And just a simple thing like Brian's showing you is what really separates a great trader from a bad trader, because it just keeps you out of those downtrends. And if you continue to buy into downtrends, you'll be stuck in a lot of downtrends. You buy in a lot of uptrends, you'll be
Mhm.
stuck in a lot of uptrends.
Yeah. That's a really good point you made there about your friend there, Jason.
Mm-hmm.
Separating your personal bias and opinions from the price action, right?
Yes.
I can't emphasize that enough. Like, look at how many like growth investors are missing out on this commodity run, right? And
Yes.
then look at how many old school commodity guys are missing out on the moves in tech, right?
Mm-hmm.
Late November, last November, since last November, like, banks have had a phenomenal run, oil, uranium, all these sectors, and look at how many people, like, have been hating on banks, right? And what did
Oh yeah.
banks do? They had, this phenomenal move since November, right? How about the fact, last, March of last year, when a lot of people were, in panic mode and, they were calling for the next Great Depression, right? And then what does the price action do? It reverses, and
Yeah.
and it keeps trending higher, right? And look at how many people just kept on the sidelines watching prices go higher and higher and fail to adjust their, you know, outlook and opinions to reflect the price action, right? So I always think, like, you know, being a trend follower, you know, you're actually kind of improving as an individual, right? You're
Yes.
learning to put away your ego, right? Your ego is the thing that really, you know, sabotages you and hurts you, right?
Absolutely.
Um, yeah, you learn to be objective, you learn to be patient, you learn to be self-sufficient. There's all these lessons that you're learning, right? You're learning that, you know, the world is a lot more complex, you know, than it seems. There's a lot of pieces in there that you may not understand. And, you know, if you create some sort of like fundamental model, right, and it might eventually be correct, but, you know, the other market participants at the current time might not think that, right?
Yes.
Um, so there's all these different, you know, lessons that you have to slowly kind of learn the hard way. You have to slowly let your ego, you know, down. And, you know, it is a challenge because you kind of get into the markets and get into active trading because you need that kind of confidence and ego in the first place, right?
Yeah.
But you
Good
know,
point.
there's a certain point where that ego gets in the way then, right? Where, you know, you came in thinking, hey, I can do this, but your ego takes you and makes you stubborn. It makes you fight trends and all these different mistakes, and eventually you learn to dial it back, right? And that's what I think is the reason why it takes us so long, right? To really kind of fine tune things and really get on the right track. There's a lot of, you know, initial period where you have lousy performance, you have a lot of drawdowns, a lot of stress, and then you slowly learn, you know, the things not to do and the things that you should be doing, right?
Yes.
And you know, I always once in a while will tweet like a couple sentences just on mindset and market psychology, right?
Hmm.
And initially, when I was doing that, I thought, hey, you know, like, you know, maybe in a couple weeks I'll run out of things to say, right? But it just seems like every week there is always some new thing I think about tweeting that's like mindset related, right? And so,
Yes.
you know, I've kind of actually just to jump ahead, I'll come back to the breakout trading, but, you know, I sort of kind of compiled in a blog post all the different, you know, things related to mindset, right? And they're just like simple little like sentences that are, you know, pretty powerful, you know, that you just have to kind of remind yourself, right? You know, these simple little rules. And, you know, you have to kind of just, you know, have that perspective, have that kind of, you know, again, staying simple, objective, thinking long term, not letting the short term noise, you know, mess with your, you know, your mindset and your calmness, right? So,
Hmm.
yeah, yeah. So,
Yeah, no, that's perfect. And it's really interesting because like you said, over time you start to really get it. And that's the one thing why I start everybody. I mean, if you talk to any professional trader, the first thing they're gonna send you, and same thing I do, and I used to get annoyed by when I was starting, which is here's this book on risk control. It's like, wait a minute, you're not gonna send me the secrets? It's like, no, that's the secret. The secret
yeah,
is risk control, and it's
yeah,
for a couple of reasons. And one reason I
right.
don't think it's talked about enough is it gives you time to
Mm,
learn, time
mhm.
to experience, because you're gonna need that. That's the real way you're
Yeah.
going to learn how to trade. It's not like it's just like any other thing. It takes time to get good at it, time to master it. And it's just like, learning a trade. It takes you years, many years, and I will always be learning more and more. And I'm sure you would say the same thing. It also takes you being very humble, understanding that you don't have a perfect system. You haven't figured it out completely. There is
Oh,
no
absolutely.
figuring it
Yeah.
out. It's
You
very
know,
imperfect.
one thing I was just thinking about, like I was just looking at your YouTube channel, like you have some, you know, some amazing guests, market wizards, Tom Basso, Victor Sperandio, and you had them on your show. And I'm thinking, you know, I'm just some little guy who's still figuring things out, right? I'm still like making a lot of mistakes, and I'm on a show with, you know, some of these pros that have, you know, just nailed it out of the park, right? So yeah, like this is still an ongoing kind of learning process, but
But they would all say, it's funny
yeah,
is, they would all say exactly what you said. There
right.
is no, figuring it out. They would all say, they're still making mistakes and they're still learning, like that's something that Basso talked about, just still making mistakes, still learning, who's more experienced, who knows more about trading.
Hmm.
And you find a lot of people in trading, especially like the people that haven't been doing it for very long. They get on FinTwit and they talk about, how they talk crap on this group of traders. Like, let's say hedge funds have had a pretty hard 10 years.
Yeah.
They'll talk crap on them and how they could put together better returns. And you just have to understand that it's not about always the better returns. It's also understanding what they go through. It's also, you don't,
Hmm.
most of us don't understand what it feels like to run, $100 billion. It's much different than running a $10,000 account. Even once you get to the millions of dollars, you start to have an understanding of someone like Warren Buffett, who's been compounding at 20% all these years. So it's kind of, to
Right.
me, it's a more will be revealed. Over
Yeah.
time, you
Yeah.
continue to trade, you continue to learn, and you learn more and more, and just never being satisfied, because I can put together some great years. I have been, but still it's a, I know I'm missing something. I know I could do better. I know I could look here, but also I do know that what I do works. Like, you have this strategy, and this is the thing that I think everybody should really take out of this with Brian is he has this great strategy. He's laying it out on the table for you. You can touch, like Brian can touch little parts of the strategy as the years go on and make it better and better, but this framework is everything. That
Hmm.
framework will be a way for anybody to kind of come in here and put together something that's really good, and puts, mainly putting together solid returns over the years.
Yeah. Yeah. I think we can move on to the next part, which is breakout
Yes.
trading, right? So again, um, we talked about leaders, and leaders is synonymous with relative strength and momentum. All those phrases are the same thing. And then number two, breakout trading. So that's synonymous with trend following, right? Looking at charts. So let me just go to the blog post that has it there. I think. Okay, yeah. So breakout trading. Um, so this is one of the things that like using charts. There's so many ways that you can draw, annotate a chart, right? And over the time, I kind of gravitated to something where, like, I used to draw a lot of diagonal lines on a chart, but over time I realized that, what, just a simple horizontal line is a lot more objective than a diagonal line, which I can adjust upwards or downwards based on my bias, right? So a horizontal line is more clear cut. I know where I'm getting in, and if I'm wrong, I know exactly where I'm going to be wrong, right? Um, and I saw recently you had interviewed Steve Straza, and you guys talked about the market doesn't know diagonal lines, right?
Yes.
The market knows price levels, it knows horizontal support and resistance, right?
Yeah.
And you touched on Alex Elder, his book Trading for a Living, same thing. He talks a lot about, if you want to do charts, you want to try to keep it as simple as possible, go with horizontal lines, right? And I also mentioned before that you know compared to like a moving average, right? When I'm using charts with a horizontal line, that horizontal line is a hard stop, right? As opposed to a moving average, which is more of a soft stop, right?
Yeah.
Um, so the other thing that so that's basically how to annotate a chart. The other thing is what time frame to use, right? So I'm showing you a chart here with a daily chart, right? I very rarely use a daily chart. If you look at my Twitter feed, my blog posts, I would say like 80%, 90% of the time, I'm posting charts that are weekly time frame, right? And so what's the reason for that, right? So, um, daily, weekly, monthly, right? So those are different time frames that you can, chart, um, and there's actually, a trade-off. So if you have a daily chart, the advantage there is you can be potentially a lot quicker to get in to a trade and quicker to get out of a trade, right? So that's the advantage. The disadvantage is you're susceptible to the daily noise, right? The day-to-day chop, which we've seen in the last, 18 months has been quite a lot, right? Um, monthly chart, on the other hand, is the opposite, where you're not getting whipsawed. You're seeing the trend, the underlying trend. There's very little noise in that chart. Now, the downside is you are very slow to get in and out, right? And a weekly chart is kind of like that sweet spot where, if you assess, the markets, let's say every Friday after the week is closed, you've given it enough time to kind of like, bounce around, do its thing during the week. And then you look at, okay, how did it finish those 5 days, right? That's a lot of, now we have quite a lot of data on that one candle. And how did that candle close relative to, like, the past, several weeks, past several months, and even years, right? um, and that's kind of where I found, like, how my charts can be the cleanest while still being relevant to the current price action, right? So yeah, again, if you kind of look at a lot of the charts, so I just did a blog post today, and here's a monthly chart of uranium, right? It's showing, look, since 2011 it's been in this strong downtrend, then it based for several years, and then last year it made this breakout, which we last month saw a retest of that breakout, right? Here's the weekly chart of the URNM ETF. And again, you can kind of see, like, uranium is a sector that's, like, quite high beta, right? So there's quite a lot of up and down. And if you're looking at a daily chart, you're going to, it's going to be very tough to draw like a clean line that's defining your risk, right? Whereas on a weekly chart, like, you can see more or less the support line has acted as, clean support. And again, same with the past, let's say 8 months, that's been another support level, right? So, that's more or less in a nutshell how I approach my usage of charts. You want to keep it super simple. Anybody should be able to look at your chart and right away know, what it means, right? I always say, you know, um, you know, I like to, as if you're talking to a child, right? You want to say, okay, above line, we're long, below line, we're out, right? And below line, somebody else's problem, not mine, right?
Yeah.
So that's it. You're creating this binary outcome. It's essentially like, a call option, right? So we're long as we're above the line, and so we have unlimited upside and we have limited downside, right? So that's the type of mindset that you want. And you have, it gives you just so much confidence, right? Like, first, when I'm taking on positions, they're in all the leaders, right? So right away I'm already aligned with the market forces. And then second, those positions are the ones that are above, a breakout level. So, I have that, like crutch, right? That horizontal level. If it breaks, I'm out, right? And so that is the second layer of confidence. The third layer of confidence is when I go into a position, it'll be, let's say, 5 to 10%. If it's 10%, if it's a, an ETF, right? So basically all those elements, right? The momentum, the trend, and the position sizing combined give you these three levels of confidence, right? And so you can sleep perfectly at night. You feel very comfortable and confident in your holdings, in your positions, and you're able to just calmly stomach any up and down. One thing that's been really good in the last year, where we've seen these wild sector rotations, is identifying leaders in different sectors, right? So, you clearly have leadership right now in rare earths and uranium. You also have leadership in crypto, right? And you have leadership within tech, like cybersecurity. The bug ETF is very strong. So if you kind of have these positions that are in different asset classes, in different sectors and asset classes, and you position size properly, and they're the leaders, and they're above their breakout levels, like that's the confluence of getting great risk adjusted returns, right?
Yes.
Yeah. I
Oh,
guess
that's beautiful.
one thing I just want to wrap up on in terms of just my process is, so it was, I've been tweeting, like I basically started on stock twits back in 2011. So it's been a little bit, so it's been a little bit over 10 years that I've been just using stock twits. And I've always seen that as like a good way to journal, right? So I never, like when I started, like, I had 0 followers. I was just on there, just, basically keeping a diary, right? Like posting a chart. And, it's kind of embarrassing because if I were to go back that far in my history, I would see all the different, like mistakes I was making, all the complexity in my charts. So that timeline, I can see over the years, like how my charts got simpler and simpler, to the point where it's just, like usually one horizontal line on a chart, and that's it. It's a weekly chart. There's not much happening day to day on that chart, right? So, so basically using some sort of like, like a Twitter stock twits as your journal is such a great idea. Um, to take it a step further, back in December last year, so JC from All Star Charts, we started chatting, and he's like, hey, why don't you have a blog? You should be it's a great tool. So then I started the blog last December, and it's been, I think, a step better than Twitter, where like you can actually synthesize trade ideas with multiple charts, and some sentences, right? And it just gives this nice, neat little journal entry, right? Where you're able to kind of like tell yourself a story. You have these charts. The charts have these well-defined lines. The blog post is dated, right? So you can come back to it. You can learn from it. So not only does it help you formulate, a more longer form idea, but you can come back and learn from it. And during a trade, you can constantly come back and reflect on it, and just remind yourself why you've taken a certain trade, right? So
Point.
so all these different factors, finding the, following the leaders, following trend, position sizing, being patient, and journaling. All those are, all the ingredients to being successful in the markets.
And I agree with that completely. And even I run just a small group on Telegram, and just basically having a place to constantly put your thoughts. And I also have a handwritten journal I keep as well, but just a place to put your thoughts, and just to it's a way of also staying objective. You can start to see if you're getting off track. You can start to see if you're missing something. You
Yeah.
really can't do that if you're not analyzing yourself. And if you, I always say, and that people find this funny, but I'm serious, is that if you really want to know a lot about yourself, start trading.
Yeah,
There, it will
absolutely.
tell you all of your bad habits, all of your good habits, your good
Right, right,
qualities and your bad qualities very
right.
quickly.
Exactly. Yeah. Your risk tolerance, your, like there's all these different things you learn about yourself. It teaches you like how stubborn you are, your ego,
Yes.
it's again, like I always think it's, like being a successful trader, like it teaches you, it makes you a better, person, in terms of patience, reducing your ego, being humble, right? Thinking longer term, all these different things. Yeah.
Yes. And no, I mean, but yeah, that's great. And just going through your strategy is very important. And what we do here a lot. We really try to focus on learning. And I think that's something that strategy wise, people don't really understand what our strategies are. I think that's a problem
Hmm.
actually that's very prevalent in trading is, most people think everything is and like we talked about before we even got on, is everybody thinks it's, my fund, for example, it's me and a couple guys, we sit in a room and we all argue about something going up and down, and then we put on, if the fund is $50 million, we put all 50 million into a
Hmm.
trade, and
Yeah.
if we lose we blow up, and if we win we don't. And it's kind of, that's really to me that's really concerning that people actually believe that's the way trading
Yeah.
is. But
Yeah.
no, this
Well,
is real trading here, what Brian is showing everybody.
yeah. Yeah. Like there are no shortcuts, right? Like, I mean, we all kind of enter the markets thinking that it's this get rich quick scheme. Like you can just put on this high flying stock with a huge position size and you'll be rich, right? In months or weeks or months. But no, it doesn't work like that, right? There are no shortcuts. You have to, pay attention to risk management, right? That is super key. You know, one of the things that, I always feel that people don't appreciate fully is just how powerful compound interest is, right?
Yes.
Just let's say a 10% return a year, which is very doable, that amounts to quite a lot in 30, 40 years. A 20% return is like, you end up with more wealth than you're going to know what to do with, right? If you do that over, let's say, 30 years, right? And if you're thinking that you can double your money every single year, I think I crunched the numbers here. It's something like yeah, if you double your money every year, you turn $1,000 into a trillion in 30 years, right?
Yeah.
so,
Yeah.
so
Yeah.
so you're not, don't think that, you need to do a 2x every year. Like, that's, if you do a 2x, like in a year, like that's a great year, right? Don't get complacent. Don't think that's what your new benchmark is. That's what your bar is.
Yeah.
Because if you can do 20 a year, if you do, like, as a new trader, especially if you can do 10 a year, 15 a year consistently, that is great. If you can do 20, then you're doing really good, right? And like the greats, right? Like you were mentioning Buffett, Druckenmiller did 30% a year. So these are all respectable, highly respectable market participants, right? So we shouldn't expect to do, like considerably higher consistently every year, right? I mean,
Yeah.
there are always, the handful of people out there, the market wizards that achieve that, right? But for a lot of us mere mortals, like, you got to think long term. You got to be patient. Pay attention to your process. Don't take shortcuts. Don't see what your friend is doing and you saw him getting rich and then you're jumping in, right? You're getting FOMO, all these different things. You learn the hard way that, just take a step back, wait for those quality setups that I mentioned, right? So there's a few quality setups. You wait for those patiently. Then those few winners like really make your year, right?
Yeah.
The
No,
other
that's a good
one
point.
thing I wanted to touch on is, we're kind of, it's sort of similar to what I just talked about. We're kind of living in this hyperactive world where we have, real-time quotes 24/7 flashing on our screens. We have endless streams of news. We have all these people on FinTwit with different time frames and strategies, right? So it's really easy to get like just lost in that sea of noise and
Oh yeah.
confused, right? So, it's really important to, first of all, you should be turning off the news, right? Like that's the easy one. You don't need to be looking at real-time data. Um, and in terms of like finding the right people, that's more of a kind of a personal thing because everybody's personality is different, right? But generally speaking, like, there's I'm really grateful for all the people that I follow. Like there's some amazing people on Twitter, right? That every day they're just pumping out like either like the right mindset and psychology, or these really charts that I miss myself, and they picked up on these charts, and I'm like, okay, that's good to know. There's all this like, guys like yourself are producing these amazing content with top traders, and the rest of us get to listen in, and from the comfort of our home, we get to hear a lifetime of mistakes and lessons that they've learned, and they're just giving it to us, right? So super fortunate to be able to do that.
Yeah, and the one thing I would add is that there is almost when you are picking an analyst, there is something that is interesting. So I believe that, like, if you want, like, for example, everybody picks services they're in based on performance or whether they like the guy or not. But really, the whole thing is you have to figure out what you're going to trade, what these people cover, what their time frames, and you need them to align, or you're not going to have any confidence in their positions. So if
Mm-hmm.
you're, for example, looking for another commodity bull market, and even if you're a trader like you or me,
Mm-hmm.
this could still be beneficial. You or me, we're going to get out at certain points, but it sometimes is beneficial to hear somebody's point of view that might be disagreeing with you. So
Oh yeah,
so
yeah,
sometimes when you have an analyst like that, you can just kind of get in, pay attention to the things that you're
yeah.
doing. And me trading so many different things, I have my analyst in almost categories, which is
Mm-hmm.
a
Mm-hmm.
category for commodities like grains and softs, and then I also have like my energy analyst, and then I have
Yeah,
a personal
yeah.
analyst that works with me. You put all these things together, and you
Right.
kind of can create kind of a good outline, and that's, to me, is all I listen to. And I really
Yeah,
don't, none of
yeah.
these are real like crazy analysts that I'm really really listening to. It's
That
just, I don't listen to any news, I don't listen to anything, and the
yeah.
trades all have to make sense for me to ever put a trade on.
Absolutely. Like you got to find your tribe, right? You got to find that few people, that your team, that you're gonna learn from, and that reflects your style of trading, your personality, all of those things. But even like you said, like even having people that you might not fully agree with, like you kind of, sometimes we get stuck in this bubble where we're just seeking confirmation bias, right?
Yes.
And there's things that you got to try to be objective, try to hear the other side of the story. And I like to think that the process that I do itself is inherently objective, right? So if the price tells me, I'll be long. If it tells me otherwise, I'll be out, right? And yeah, just keep it simple.
Yeah, and that's what, I like what the way you put things, and with the little, even the at the top of all these things on your pages, you kind of put a little saying on there. It's very simple, which is, keeping it simple. And I always call it caveman trading, which is,
Yeah.
I want to literally be able to say three words and it to
Yeah,
make sense for what I'm going to do.
that's
Failed
right.
move. Failed moves lead to fast moves, things like that, because it's
Yeah,
very
yeah,
these things will stick with you. And
yeah,
also, like, trading should be simple. If you're making it really complex, like
right.
if you're looking, like you said earlier,
Yeah.
if you decide you're going to trade breakouts, and then you
Mm,
go, well, I'm not going to take this breakout because I found this sentiment that looks too much, and then this
mm,
guru over here said this, and then I was watching Bloomberg. I mean, by
yeah,
that point your
yeah,
trade's over. You probably missed your entry. like
right,
like you
right.
put all these things together. Like, look at uranium, for example, and this is here's a
Yeah.
good story from last year, and you'll remember this for sure, which
Hmm.
is last year around the election. Everybody was bearish. The world was going to end. I mean, like, it was whether Trump or Biden got in the United States, the world was over basically.
Absolutely. Yeah.
And we were all sitting here, and the end of October, there was Europe shut down, somewhere else shut
Mm,
down, and oil starts ticking up,
right.
just ever so slightly. And then you see relative strength kind of move into those areas, and
Yeah.
like your chart you showed earlier, the relative strength starts to move into these things, and
Yeah.
next thing you know, those are the leading sectors for
Yeah.
they're still the leading sectors. Sorry,
Yeah.
they're still leading sectors to today: financials, energy,
Right.
industrials, materials. So that's really the strength of being able to do that and use these types of things.
Y-
Um,
You know,
Go ahead.
it's so funny because like all last year I was thinking, I'm like, so, we had that pandemic crash, and then we had that, sharp reversal rally, and everybody was just like, this doesn't make any sense, right? Like, like all these businesses are shut down, unemployment is skyrocketing. How can this be, right? And then eventually by the summer of last year, people were like, oh yeah, like the work from home stocks, the Zooms and those tech stocks, yeah, that makes sense, because everybody's using their services more. So yeah, that's why they're higher. So people start piling into that trade. And then right around that time, the sectors that people least expected to go higher, stuff like banks and commodities, they're ripping higher, right? And then again, you have that wave of like, how does this make any sense, right? you know and so that's the beauty is, often what your emotions are telling you to do, the price action often is telling you to do the opposite, right? So that's why we follow price. Is price will tell us well before it becomes common sense that why that trade worked, right? uh,
Exactly. And
so yeah.
that's the beauty of, like, the election, for example, was very
Hmm.
kind of very easy to see, even
Yeah.
on using whatever, if you were a sentiment trader, if you were a technical trader, whatever type of trader you were, it was easy to see it was going to move the other way.
Yeah.
And it didn't matter who got elected. None of that matters. It's just, and
Yeah.
also there is the pattern of, generally there's a good best 6 months period in the market is usually November to April.
Right.
November
Right.
being a very strong month usually. I mean, you put all these things together
Yeah.
and you
Yeah.
have a very solid trade. And the technicals said that, the price action said that,
Yeah.
the relative
Yeah.
strength said that, and that's why it's very important to check out what Brian's talking about. And the same was last, right around the time where tech bottomed.
Mm.
You were the one talking about that too, and that started moving up in relative strength. And
Yeah.
you started talking about tech being at a bottom, and everybody, and that's what happens in markets, is everybody gets in one side or the other. So everybody
Exactly.
who was
Yeah.
in the commodity trade, which wasn't many, but
Yeah.
for
Yeah.
the people who were in it, they didn't want to believe that. And
Mm.
you talking about it, my signal came later than yours, and then we started buying large cap tech.
Yeah.
And so it's like, this is how all of these work. This is how this moves. And it doesn't matter what we think, it doesn't matter what we feel or believe in the
Exactly.
future. We don't
Right.
get paid for that. We get paid
Exactly.
for what the price is actually doing.
Absolutely. Yeah. Um, you can kind of argue that currently we're, at that point where, we can see that other rotation back now into, the stuff that was working earlier this year. So like, we talked about uranium, crypto, bottom late July, uranium bottom last, 2 weeks ago. And, just generally, I feel, I did a blog post on this last week, how, first of all, I'm bullish on stocks overall. Like, it's a risk on environment within stocks. Let me just back up actually, like, like if you look at US, Canada, Europe, all these different regions are, within 3% of their all-time highs, right?
Yeah.
Then you look at within the US, 9 out of 11 sectors are within 3% of their 52-week highs, right? So that's clearly, bullish. Then we've had, a lot of global equity indices that came out of like multi-decade bases last year. So there's a lot to be bullish about in stocks. Now the thing is, like, the rotations, right? So that's the thing that I was fortunate, like in May, to pick up on the tech trade, late May, and now I've been kind of adding a lot of you know cyclicals, so like, uranium, value, small caps, these kinds of things, right, in my portfolio. And yeah, you just have to, again, be objective. You don't want to be that person that's always that tech bull or always that commodity bull. You have to be able to be objective, right? That's the way you can really deliver some good performance.
Yes, and I mean it's very interesting for me, because I can remember pretty clearly, like it's about 9, 10 years ago now, where I started to kind of put these things together, and like you can see the difference, like from the person who is like, oh, look at my one, thinking about the one trade that worked out really well one year,
Hmm.
to these consistent returns over this extended period of time. And
Yeah.
it's all and what you're talking about is a very similar strategy to what I do. Now
Hmm.
I do use certain things. I would consider myself more of a conditional trader,
Okay.
meaning that I use, so there's only one other person where I get that from, and that's Larry Williams. And Larry Williams was one of the guys who just I gravitated to, great futures trader, probably one
Mm.
of the best ever. And so he'd call himself a conditional trader because he would use things like COT reports, seasonals, all these things, kind of mix it all together and create
Hmm.
his strategies from that. So that's what I do. But the next step to my trading is that I do not, like, if all those things don't link up and the price action is telling me something, the price action will always override everything. Always.
Absolutely. Yeah.
And I think that's, you too, like, no matter what anything is. And as time goes on, I will admit, like, I simplify more and more and more, and it becomes
Mm.
more price action based over time.
Yeah.
Because really, like, that's the leaders, that's going to tell you everything you need to know. And so, talking about returns a little bit more, um, you're able to, because you're doing this in the way you're doing it, your drawdowns are also will be a lot smaller. So
Correct.
meaning, like, if I think and I believe, this is, once again, we don't trade on beliefs, but I think and believe that the um, basic trade in commodities and the reflation trade is kind of going to continue to take off for the rest of the year. But I
Hmm.
know there will be periods of change. There will be periods where growth will take over and tech will take over, and because a
Right.
good bull market will rotate. I think the overall environment means the reflation trade will be the major winner. But in the meantime, we still have to be trading these other vehicles. We still have
Yeah.
to be willing to get out of these other things to keep our profits, to make
Yeah.
sure our drawdowns aren't huge. Because as you know, the bigger
Right.
the drawdown, the harder to get back to even, the harder to get back to up, especially.
Yeah. Absolutely. Yeah. It's always you can look at the big monthly charts and you can kind of, see like, like the big picture, like, like you were mentioning the reflation trade has, quite a while it's to go. And yeah, you can see that in the monthly charts, right? But it's, as we've seen in the last, 6 months, 12 months, there's been quite a bit of rotation and it's there like to take advantage of, right? Like, you could have that long-term kind of view looking at the bigger charts, the longer time frame charts, but that's shouldn't exclude you from taking trades that are counter to that long-term view. And that's, again, follow the leadership, right? The leadership will tell you what's acting strong, what's breaking out, and leave your biases behind and just follow what the market is telling you to do, right?
Yes. And that's so bring it to the next one, and I think is something good to talk about here would be, what are you seeing now? What do you think? You talked about what you like, uranium, but is there anything else you're interested in now? And what do you think about the tech trade at the moment?
Yeah. Yeah. So currently, last week I wrote this blog post that kind of summarizes overall the, so bullish, I'm bullish stocks, I'm bullish crypto, within stocks, value, small caps, cyclicals. And I basically, this is commodities like uranium. Um, so that's what I'm really, bullish about, but I still do hold some tech, specifically cybersecurity ETF, you know. So, there's different elements in my portfolio, you know, uh, and they're all basically the leaders, right? So again, crypto, cyclicals like uranium, and cybersecurity. So those are different, things that I'm really bullish about, and stuff that I haven't, or that's still in the no-go zone for me that I talked about before. was, we saw K-Web, China Tech was deep in the dumpster, gold and bonds, right? I was you could like talk about intermarket. There are relationships in the market that have been holding. Um, you don't have to really do too much intermarket work, because often what it does is it kind of gives you paralysis by analysis. It kind of adds this extra element of kind of having you miss a trade, right? So you should basically, if something is showing leadership and it's breaking out, you should follow it and not wait for, like, let's say, interest rates to confirm, or the dollar to confirm, etc. Right? Now that said, one chart that, if you really do kind of want to understand the intermarket stuff, one thing that's been kind of a handy little gauge for me just to glance at every once in a while, has been this chart where, I'm looking at bonds, which is, the 20-year TLT, gold, right? And then if you kind of look at, both of these markets, we know, the lower the interest rates, the higher these two go, right? But then there's also these sectors of the market that respond to interest rates as well. So, like, the growth to value, the large caps to the small caps, the large caps to energy, and large caps to banks, right? So all of these different things, you can kind of see. So, like, from 2018 to, like, let's say mid 2020, that was the period where gold, bonds, and tech were the winners, right? And then kind of like, that leadership we saw changed around kind of, like Q2, Q3 of last year. And what did we see? We saw banks started to outperform, energy outperformed, small caps ripped, value came back into flavor, right? And gold and bonds suffered, right? And that was this leg down here, right? I'm not sure if you can see my cursor moving
I
there.
can.
But
Yeah.
yeah. So, and then this is like, that kind of that, basically April to May, where I kind of picked up on, the tech trade and got this caught this, rebound in growth again, right? Um, and then of course, small caps did nothing for the last like 8 months. Energy kind of, lagged, especially since June. So, like basically like interest, or yeah, bonds went higher, and that kind of affected all these different markets, right? And kind of what I'm seeing right now is, so just having that picture in your mind, if I kind of look at current market view, so like, yeah, like bonds right now facing resistance. Gold miners, GDXJ, broke down from an 8-year base, right?
Yeah.
So this is a consistent story where if bonds and gold are weak, usually that happens when stocks are strong, and especially when, cyclicals and crypto, small caps, all these are starting to show strength, right? So, it's kind of connected, but again, you don't want to overcomplicate things. You don't want to overthink things. Don't wait for like a certain intermarket, variable to give you confirmation, right? If something like, here's the value ETF, right? If it's breaking out, I'm bullish, right?
Yeah.
IWM. So since last week, so this is kind of edged up. Now it's kind of on the verge of a breakout there. And crypto, I did a post on this yesterday. So, we saw, again, this is all about following momentum, right? Like, what's had the highest momentum? Well, it's been the crypto space. Within
Yeah.
crypto, Ethereum, Cardano, Solana, Luna, right? These are the areas that have been showing the strongest return, momentum. And look what's happening is Ethereum just came out of a 5-month base, right? And highest monthly close in August, and September is running out of the gate strong, right? And yeah, you can check out the post I wrote it yesterday. There's a lot more charts from crypto that are basically showing a lot of new fresh breakouts. So you have a clear defined level. That's your risk management. And you want to basically be long as we're above that line, right? So yeah, check out that post. So this kind of basically just ties up everything from all these different parts of the market into kind of one picture, right? And again, it's risk on. You want to have stocks, you want to have crypto, and you want to try to avoid some of the, the flight to safety vehicles, right? So, bonds, gold, US dollar, those kinds of flight to safety vehicles, or not only showing weak momentum, but showing breakdown. So again, no-go zone, right?
Yeah, so the one thing too is, so I talk about this a lot. I use a lot of intermarket analysis. I really like it. I
Yeah.
find it is a major edge for figuring out environment. But I always tell people when they're starting, stay away from it because, like you said, you get into too much of, oh, well, I would buy this, but this is telling me this, and
Yeah.
like for example, perfect example is energy and tech. Like those things don't usually go up together. If you read the intermarket analysis playbook, there was no reason to be long both of them this year at a
Yeah.
certain point, but that
Exactly.
did happen.
Yeah.
We ended up getting a good trade in energy and a good trade in tech. So
Yeah.
it's very it's very dynamic, and you have to also take yourself out of it because, like you're talking about gold and cyclicals being inverse. And for me, yeah, I understand that. You look at the price action; it says that. It said that over
Mhm.
and over again.
Yeah.
Same with bonds being because people are doing flight to safety. But if you talk to like an economist even or a PhD and you say that, they'd say, oh no, gold and oil go up together because of inflation or something, and it's just not really the
No.
case
Yeah.
at all, and that's
That's right.
completely wrong. So
Yeah.
you really have to go through the history and do all that stuff, but really have to let those breakouts be the end all be all.
Exactly.
If you're gonna take it, take the trade. Don't go
Yeah.
into your intermarket analysis and say. For me, it helps me to figure
Yeah.
out what should be moving and what shouldn't be moving.
Absolutely. Yeah.
Like you pointed to here, then the sharp spike you talked
Yeah.
about, that's where tech took off. It's
Right.
absolutely right. That's
Right.
absolutely true. It started to
Yeah.
be the outperformer then.
Yeah.
So that makes
So
perfect sense.
absolutely. And so again, it just the intermarket, when it does come together, it's really elegant, right? It gives you this warm and fuzzy when the various segments of the market kind of just align. So again, if we kind of see that weakness in bonds and in gold, right? We're seeing that strength in stocks and crypto, right? In small caps, right? That means there's risk appetite when and the market's kind of going at the risk curve, going into small caps, into crypto, into commodities, right? That's just showing that this is a strong bull market, right? And so those flight to safety vehicles just have very little demand, right? So again, yeah, just what you said is bang on, right? Just follow the price action, but do once in a while glance at the intermarket, right? Because it does, it does kind of give you this, um, what's the word, weight of the evidence approach, right? So when all these different things are confirming, it just gives you that extra confidence, right? So yeah.
That makes a lot of sense. I mean, it's really interesting because for me, I like to see like you're using momentum. I use my trend system basically across all these different asset classes, and with that, like you can see that, for example, let's say tech started giving underperforming the S&P back in November, and XLF and all these things started doing a lot better. And so that type of intermarket analysis, and then CRB, actually I use a CRB against the USB. And you could see that the CRB started taking off majorly around that time and actually had a breakout. So, you put all these together and sure, you can use them. You just have to be careful that you don't get stuck into, I can't
Yeah,
take this trade because this isn't working.
that's right. Yeah, 100%.
Oh, cool. So And then the last thing I want to ask you is, so with all that you know now, and we kind of went through your strategy, but what would you say to a younger version of yourself, a couple years into trading? What would be some advice you might give?
Yeah, there's like tons of, like little tweets that I wish I, kind of saw when I was a younger person. But sometimes, like, you read that information without any experience and it just doesn't really have that context, right? Like you kind of,
Yes.
I feel, sometimes have to put in that time, and you got to pay the market, the tuition fee, right? Make the mistakes, because then they're seared in you, right? Sometimes you have to have, a large enough loss so that it kind of sinks in and you don't touch that hot stove again, right?
Yeah.
But that said, there's like, don't delay, like, trying to, like, find the right people on Twitter, find the books that, books to read on trading, right? And that learning process, don't delay it. Don't basically be, don't come in with an ego thinking that you understand everything, and being stubborn, and not taking all this. We have so much valuable, so many valuable resources out there, right? So many books that, it's amazing how you can buy a $20 book and it's got somebody's entire life lessons in it that you can just get for $20, right? There's like podcasts that you're doing, like, people should go out and, like, watch, how some of the top traders out there, how they're thinking, what their mindset is, and just try to, like, um, you know, have all that, all their energy rub off on you, right? How they think, their mindset, their attitude, all these different things. Like, you want to try to, yeah, just basically find that tribe, keep learning off of them. And, the other thing is, like, you got to be persistent, right? So I think, me, despite having made pretty much every mistake you can think of, what kind of kept me, in the game is, like, I kept having those aha moments, right?
Mm-hmm.
Where, the first thing that kind of got me hooked into the markets was when I had a high school teacher that taught me, the power of compound interest and what stocks were, right? This was like back in 1999. And I was only in grade 11 of high school. I knew nothing about markets. And here's somebody that just came and taught me a whole course on stocks and compound interest, on how to do your taxes, how to write a will, how to choose a credit card, all these different things, all these street smarts. And right away I thought, oh my gosh, like, this is a game changer, because, if I just stick to these lessons that I've been taught, I should do really well in life, right? And unfortunately, like, we started a 10-year bear market in the 2000s, right after I learned all these lessons. And then it's like, oh my gosh, now I got to get into active management. And how do I do active management? So unfortunately, I first went into, the wrong route of, trying to, like, understand economics, trying to watch CNBC,
Yeah.
all
We all
that
do
nine.
that.
Yeah, right. And you do that enough, and then you're like, okay, this is getting me nowhere. I'm spinning my wheels, and it's not, working. So then you start looking at, okay, wow, like that guy just posted this price chart. That's pretty interesting. Let me try my hand at that. And you get that aha moment, but then you make more mistakes, which is you add complexity, you fight trends, you abuse TA. And then the next aha moment comes. It's like, okay, no, I gotta align myself with the trend. I gotta, you know, um, follow the leaders. I gotta simplify. Then that's like, so you just gotta keep being patient until, it just everything clicks. Everything, you find your personality, you figure out who you are, you figure out, the best approach to the market, you refine your approach, you keep following, solid people on Twitter, you keep reading books. You got to keep, like, just like how your portfolio compounds, your mindset should compound too over time, right?
Good point. Yeah.
Yeah.
No, I mean that's perfect and well said. And you know, we We do so many things in this business, and it's really, and you have to deal with so much as a trader that you really have to have that mindset at the very least, self responsibility. I talked about this the other day with everybody always attacks Peter Brand. He'll be
Mm,
long something on a breakout, then it'll fail, and then he'll be against it or short it, shortly after. And they're like, "Hey, change your mind so easily," and it's like that. Yeah, that's trading, and really, like, if you're going around and you're just like, you're on Twitter and you're not paying
yeah,
anybody a dime, and you're going around and picking their ideas and buying down their signals,
yeah,
that's your fault in the first place. And
yeah,
two, you just have to accept the self responsibility no matter what. You need to understand why you put on a trade every single time. And I
yeah,
always say, the first thing that was ever my first aha moment was a long, long time ago. And somebody was talking about some trade. And I was like, yeah, I did well. He was like, well, what exactly did you do? And I couldn't really give him a good answer. And he was like, well, if you don't know exactly what you did, you can't do it again. And so if you can't do it again, it's worthless. And
yeah,
like, that was my first, like, wow, that's
exactly.
true.
Yeah,
Exactly. And
that's huge.
so if you're online and you're on Twitter and you're going around there just picking people's signals, like, you don't know exactly why they're doing what they're doing, but maybe
Hmm.
talk to them, start up a conversation, read I mean, the guy has written, the book it's a very good book, a Diary of a Commodity Trader, I think it is.
Yeah.
Yeah.
Actually, funny you mentioned, because when I was, so I was talking about how I started active investing and I started looking at economics. Then I moved into technicals. Peter Brent was one of the first guys I saw. I think he was one of the earliest, TA bloggers out there.
Yeah.
And it just struck me like his charts were uh, quite simple, black and white. He clearly identified, this is like where I'm in, this is where I'm out. And that from the very beginning is kind of like, I would say like one of the, maybe the first three guys that I started following, and observing price action charts from, and just having that kind of absorbing that slowly, right?
Yes.
So yeah, Peter Brandt's, and that's a really good point, is like, we traders, we can put on a trade today and that necessarily is not our trade tomorrow, right? And that's not because we're indecisive, right? Like that's because we're listening to the market, right? We're trying to hopefully, like, you're not having to get stopped out right away like that, but
Hmm.
um, but you have to adapt, right? Like you know you got to understand the whole reason of what the purpose of trading is in the first place. Like that's a really good question to ask, right?
Yeah.
Is why spend all this time and effort doing active trading, right?
Hmm.
Because heck, the S&P has been phenomenal for the past 12 years, right? Double digit return on average. So why do we do active trading? And the purpose is because we want to, risk management is number one, right?
Hmm.
And we want to try to align ourselves with the leaders to get the alpha, right? So that's the reason we put in the time. And to get that alpha and that drawdown reduction, volatility reduction, we don't know where those sources of alpha and drawdown reduction are going to come from, or when
Yeah.
they're going to come from, right? And so we're constantly adapting. We're constantly trying to listen to what the market is trying to tell us, right? And yeah, so that's the whole purpose. Like, you gotta, we're taking this kind of rules based approach. It seems cumbersome, it seems clunky, and it's full of, like, errors that people see. But over time, again, you got to think in terms of probabilities, right? You're trying to like, let's say you're right 50% of the time, right?
Yeah.
But your wins are much higher than your losses, right? That alone over time compounds into beautiful returns, right? So
Absolutely.
yeah.
No, it's very interesting that so many people don't understand that simple fact that it's all about probabilities. That's really the game we're all playing here.
Yeah,
And like you said about why do we trade, the outperformance, and that's why, to me, that's what attracted me to the relative strength strategies in the first place. Like it was like a once again an aha moment of going, yeah, I need to be in the strongest sectors, or the strongest, for me, I'm in futures, so the strongest commodities, the strongest indexes, whatever.
yeah,
Just because that's the way to outperform the market. That's the whole goal of active trading. If you're not outperforming the market, you might as well just put in the S&P and walk away. And that's also fine.
right, right.
If people want to use the strategy of something like that, they're more than welcome to do that. And trading is not for everybody. I will absolutely admit that. It's a very hard
Yeah,
process. It's tough. There's times where
absolutely.
you will be depressed and upset and angry. It's
Yeah,
not easy to do, but when you do figure it out and you do take the time, and if you're really interested in it, nothing is more fulfilling in my
absolutely.
view.
Yeah, it's the greatest puzzle there is, right? And we have a lot of fun doing it, but it's not as it's at the same time it's not as glamorous as it may seem at first. There's a lot of ups and downs. You got to deal with like staying disciplined, right? Even when there's a lot of uncertainty, periods of underperformance. That's going to happen to everybody, right? There's going to be good years and bad years, but as long as you keep persisting, learning, refining, right, you should do well.
Yes, absolutely. Well, perfect, Brian. That was great, and this is really a great primer on how to trade well and be profitable in a long time. And so we're gonna definitely be excited for other people to see this, because for me, this is why I do what I do. It's not
Yeah,
a For me, it's curiosity. Being able to hit people up that are interesting, that are intelligent, and get to learn a bit about their strategy, but this is a real overview of the entire strategy. So very cool.
yeah, I really enjoyed this a lot. Thanks a lot, Jason.
Yeah, thank you. Stay on the line.